Happy Friday.
Hello.
Hello, world. We are back. So, yesterday we made a purchase into a stock that we were hoping would have a gain, and lo and behold, it did. I'm going to pull that up, and that was RA Medical. So, if we look back at our history here, Robinhood will actually let you see your history inside of stocks. Every so often, it updates itself so that it doesn't have it all over the place. I've noticed that some of the things that I bought in the past, if I go back and revisit them, depending on how old it was, that it doesn't have my history there anymore, and I actually have to look it up manually. But we bought in at $19.97 total. We bought 67 of these shares for 30 cents a piece. It was actually filled at a little bit of a lower price because your limit orders will fill your order at the price that you tell the system or better. So it will, if the option is there, get you a better price overall when you use a limit order versus a market order. So we sold for $23.12. So we ended up selling at 34 cents and 51 hundredths per share for those 67 shares. Now, it wasn't intentional for this to be sold yesterday when it did. I actually put in a limit order after hours yesterday, and it just so happened to execute
But
before the after hours market was closed for Robinhood.
but
After
someone picked
hours,
it up.
what's that?
But someone picked it up.
Yeah, somebody picked it up. So I was actually a little bit surprised. I actually thought that it would hold over until this morning. But what that ended up doing is it triggered what's called a day trade because we bought it on the day we sold it. So that's actually a day trade. It's not a big deal because it's just one. But if you have too many of those inside of a certain time frame, I think that's 5 calendar business days, then that is going to set off a trend. And if you don't have enough money in your account, then they are going to, well, they're going to impose some restrictions on your account if you are identified as a pattern day trader. So you want to avoid that whenever you're looking at these stocks. If you're going to buy something, you're not using a whole lot of money, you're not going to have that $25,000 they require to have no penalty for day trades. So keep that in mind. You don't want to make a habit of buying something on the same day you sell it, or vice versa. You don't want to sell something and then buy back into it on the exact same day. You want to wait until
Mhm.
the next day before you do that. Otherwise, you could have restrictions imposed on your account. So this was just one. It's not going to hurt me in the long run as long as I don't do this every single day. So we ended up overall when we initially bought in $19.97. And what did I say we sold that at? So I can go ahead and document that here. That was 34.51. All right. And that actually put us at a total of $23.39. 39 cents because there was actually a penny taken from me on the sale for a regulatory fee. Those regulatory fees that get charged whenever you do sell a share or a stock, though, those aren't actually going to Robinhood or Webull or whatever platform you're using. Those are actually fees that are paid to the SEC for regulation and for their operational cost in order to enforce the regulations and the laws that are imposed on the stock market. So be aware of that. They're pretty minimal fees though. Those are the only times that you're really going to see fees in these kind of platforms like Robinhood or Webull though. But those are required by federal law. So
Right, the ones they basically have to force onto you.
yeah, they don't have a choice in that matter. They actually have to do that. So we're very, very close though to the current price of that stock in the market right now. So we got out at a very good time. Now, being at that
Hmm.
$23.39, we started with $20 at the beginning of the week. This is 16.95% in gain. And if you don't believe me, I will do the math for you right now. So our very first amount that we started with was $20. So we are going to multiply that by 0.1695, and that's going to give us $3.39 plus the $20 that we put in, $23.39 exactly. So exactly 16.95% in gains. It doesn't look like a lot because it was only $3. But that's not bad. I don't think it's bad anyway. There
Well,
are,
yeah, you have to put it into perspective. I mean, when you only start with $20,
yeah.
that's not going to be a lot. But if you actually consider the kinds of returns that most people are making, 16, what did you say, 16 and a half almost percent?
Almost 17%.
Yeah,
It's
that's
16.95%. It was 0.05% away from 17%.
yeah, that's really good.
Experts might
Uh,
disagree, but I learned not to listen to experts. So
well, why would they? What are they disagreeing about?
the experts, from what I saw, actually say if for what I'm doing anyway, because I'm doing the swing trading. At the end of the year, I should be at an overall 50% gain doing swing trading.
Okay, but are these the same 80% to 90% of day traders that lose all their money?
Oh, this isn't even the day traders. These are actually the analysts and experts that say, if you do this correctly and you're pattern based and you actually follow specific indicators and you know what you're doing, then you should be able to collect a gain overall of 50% of your total investment capital at the end of the year overall.
Well, at the end of the year, so this is one day.
Yeah, well, this is one
So,
week, so
well, fair enough, one week. But when did you bought Monday or Tuesday?
we bought Monday, we sold
Okay.
Wednesday, and then we bought Thursday,
So,
and then accidentally sold Thursday.
okay. So you've got 51 weeks left in a year to make what, 33%, right? Because you have $20 you started with. So you have 51 weeks to make $40.
Yeah, but remember, we're feeding our account too, so we're going to put more money in come Monday.
Okay, that's fine. So then you just calculate how much you've returned
Yep.
and you say, okay, well, but then your returns are also going to be higher. So, 17% on $40 is going to give you a higher return. So it scales.
Yeah,
But just
and
assuming,
my
you
overall
know,
account isn't reflecting that kind of return that they say I should be expecting. But I'm not an expert either. I don't know what I'm doing.
you're, well, you're not an expert and um, I'm trying to push you into making more conservative uh, trades.
Yeah, I don't have time for that. I'm kidding, I'm kidding.
Like, well, like, I mean, you asked me, this might have been off stream, but you said, what should I shoot for, or should I sell tomorrow? And I told you, yeah, because you were up.
Well, it's
Because
still my
after hours,
portfolio.
well, yeah, but you're mulling it over, and you said,
Yeah,
well,
and
what, and I said, what's it at now? And you told me, and I said, well, why don't you just sell? Take your
and
$3. That's
yeah,
17%.
just as a reminder to everybody who may be watching or who will watch this later or whatever the case may be, this is my personal account. So if anybody watched the introduction that we posted a few weeks before we started going live here, I'm assuming all of the risk. That doesn't mean that I want to willingly take risk. So understand that
Mhm.
when I'm doing something during the live stream, I may very well come back and do something later on in the day that is outside of the live stream for my overall portfolio. But we are going to track every penny of these $20 to $60 amounts that we're putting into the account as far as growing the account. I just have to actually organize my portfolio here in order to cash it out in order to make it more accurate to what we're doing.
Right.
Just because I do have some losses in here right now. You haven't truly lost until you sell.
Exactly. So, it just depends on preference. I mean, yeah, like you said, at the end of the day, it's still your money. So, do
Yeah,
you want
and
do
if
you
I make
want
a
to
mistake,
risk?
I'm going to make a mistake, and that's on me. That is, I have nobody else to blame but myself if that happens. But I don't want anyone to think that I'm making a recommendation on what they should do. That's paramount. I need everyone to understand that. You're just watching me do what I'm doing. I am not recommending that you do specifically what I do in these streams, especially if I end up coming back into my account and doing something later in the day that you don't see, and you end up holding on to something that I bought because you saw me buy it, and then not do the same thing and end up losing your money. Don't do that. Make sure you're doing your own due diligence. Make sure you're doing your own research. Make sure you're watching your own portfolio so that you don't lose.
Correct. And then another thing to mention is that um, when I say that 17% return is very good, I'm comparing that to the average person. So what you're doing is, and what even swing trading is very risky. So I guess the quote unquote experts who are saying, well, you should get 50%, they're basing that on, well, it's so risky. If you're making money, then you should be making this. Well, the idea is to make money with the least amount of risk. Because yeah,
Exactly.
I could go to a casino and put, you know, $10,000 on red and let it roll and let it ride. But I mean, you want to mitigate your risk factors while still making good amount of money. So when I say 17% is really good, if you just buy an S&P 500 index fund, you know, and you're
And
making like 7-8% a year, I think is historically around what those index funds do.
yeah,
Um,
and now that I'm actually thinking about it, I'm actually going to pull my phone screen off here for just a moment. Um,
so in that regard, you did double your money.
yeah, in that regard, um, I'm going to make a rearrangement here for just a moment.
Because the person trying to make 50% a year in returns by swinging something very widely, not in small increments over that year, would be possibly holding on to something the whole year, and then, hoping that they're going to make 50% up when they could be 50% down. So, if you're swinging something and you're taking smaller amounts, you're also mitigating smaller losses.
Yep, and when I
Because
first started doing this back in April, I was keeping track of myself by intermittently taking screenshots of my account and portfolio to kind of track my
okay.
progress. Because I haven't been doing this for very long at all. I was just able to do something, and
Hmm.
I was relieved to be able to do that with the limited information that I had available to me. That's why we're doing the channel. That's why we're doing this. That's the whole reason that we're here. Um, I couldn't find resources when I started, and that was very frustrating to me. But let me find one of these screenshots just to show where my best actual gains were overall in my account.
Right. Well, it's like we talked about Monday. Um, you could have tried to ride um, that stock that you were in higher and higher to get to that higher percentage. But I think before the live stream today, we were talking about, well, there are some indicators that the market may take a pretty big dip today. Okay, well, if that does, and you're not out of that stock, then now you're probably showing a loss. Now you have to sit on it.
Yeah, and yet to be
So,
foreseen. But this was my portfolio when I
yeah.
first started, just about a month in, and my overall gains were 47.69%.
There you go.
That was my highest gain, I believe. And it actually took me a little while to figure out where they were getting that percentage from, because I saw my account, my total investment balance was at $1,187, and I look at $383, and I'm like, that doesn't look even close to half. So I had to remember, wait, that's my total gain. That's what they're basing the percentage off of. I have to subtract that first.
Right.
So you take that away, you take that 1187 minus the green number under it, and then multiply that by the percentage shown, and you should get a similar value for your gain. But it's funny when you look at it because it looks like it's not close to what it should actually be.
Right.
But you've got to take those steps.
So,
Brian, are
so
you watching the live feed on YouTube?
yeah, I was actually going to ask you. So, what do you got over here on Investopedia? I mean, I know we use it for to reference things, but
Well, I
what
wanted to
is
make
this?
sure that the stream was going through because I just keep getting these notifications in the Streamlabs, but I think YouTube itself has been a little wonky.
I mean, there's nothing that's really changed on stream, but I mean, I can see everything. It's
Oh,
up.
you're able to see the screenshot that I have up of my portfolio from back in like the May time frame, right?
No.
No? What do you see on my phone screen there?
Your phone just moved off,
Okay,
so
so it's
it
lagging
just
behind a bit.
yeah. So, but what is this article over here on Investopedia?
I
Best
just
robo
brought
advisors
Investopedia
for
up.
social.
I haven't actually done anything in it yet, so these are just articles that they have available on Investopedia to just kind of, I guess, wet your teeth.
Ah,
So,
so
take a look at this because this could influence your decision making. Consider these things.
well,
I see it all as, more or less advertisement.
right. So yeah. So let's talk about people trying to influence your buying and selling habits. So best robo advisors for socially responsible investors in August 2020 is a joke. And I'm not saying this as a pro tip. Like, these are actual investing gurus that talk about these kinds of things and people who actually make money on the market. When you see something like that, or you see something like invest in this business based on like some of the things below that, um, you're not going to make money. I mean, you have two options in the market. Do you want to invest in things based on ideology, or you want to make money? And those are usually mutually exclusive, because I mean, fundamentally, if you're running a business, you're trying to make money, you're trying to sell a product or service.
Yes. So,
So you're not trying to uh, give money away
and
and
that just kind of circles back to the main point of all this is doing your own research and your own due diligence. Make decisions based off of information that you find yourself that is one, objective, and two, provable, verifiable information.
Mhm.
And make your decisions based off of concrete evidence. Don't go by what this person said, what that person said, what a Google search gave you. Don't listen to somebody in a comment section or on a Facebook page. If they recommend something, that doesn't mean that they're wrong, but it doesn't mean that you're informed.
Mhm.
Just like this thing right
Exactly,
here.
yeah.
I mean, if we look at these robo advisors,
Be very
these
skeptical.
services are the best for setting up a focused, socially responsible portfolio. They all feature individual stock picking for the most granular level of portfolio design. We reweighted our scoring rubric so that robo advisors offering socially responsible individual portfolios that were transparent about portfolio contents earned additional points. We also overweighted the ability to customize a portfolio. We
Yeah,
considered
that's
individual stocks a better way to construct a socially responsible portfolio than exchange traded funds, ETFs, that are designed to filter out bad actors. Being able to delete specific companies might throw the asset balance off,
wow.
but it's important to socially responsible and does that make sense? It's important to socially
That-
responsible and impact investors to create a focused portfolio. That sentence does not make sense to me.
No, not only they're bad writers, this article is hot garbage. So let me translate what they're saying. So they're, I guess, signaling, I don't know, but they're using very specific language,
They are.
um, and they're essentially telling you we're judging these based on our ideology, not whether like they specifically say these socially responsible companies. Now, you can you can buy a stock or give someone money. I mean, that's what charity is, but I would never base a buy decision, and I don't want someone filtering out, quote unquote, companies that they think don't fit in line with whatever it is they're trying to push. Like I'm not gonna buy a company. I buy a company based on whether I think there's demand for that product or service, their sales, or sales revenue, their earnings. Um, like, is this company going to pay me money if I give them money? Not, is this company going to, I guess, align with whatever uh, political views I have, values. I mean, that's kind of what they're getting at when they say social responsibility.
Yeah, but they're also.
So
It looks like they're trying to
bad
dissuade
act.
people from investing in ETFs.
Well, based on what you were saying, they're picking accounts specifically, or they're picking stocks specifically that they, or filtering out things they call bad actors. So yeah, ETFs. Um, so if they're saying these platforms have their own mutual funds, then buy those because they're putting together a fund for you, or they're saying they're filtering out these ETFs with certain stocks they don't like.
Well, an ETF should be constantly updated anyway, right? An ETF is just kind of like a mini portfolio that somebody can buy into without having to buy into the individual stocks.
Yeah, basically. Yeah, if you
And
boil
when
it down,
when one
ETF.
performs poorly, then it can actually be removed and replaced with a better performing stock in order
Right, but
to balance out the ETF, right?
right, but did you see anywhere in that in the in what you're reading about actual performance of the company? No,
Nope.
hell no.
So if we actually jump over to
So
Yahoo Finance and let's look at an ETF. How about that? Let's look at the most
sure.
popular, widely traded ETF in the world, SPY.
There you go.
If
I was gonna say, shouldn't it be based on the S&P?
Yeah, SPY is based
That,
on the S&P 500, so it is actually an
that's the
index of
benchmark.
the S&P 500. And
Yeah.
the S&P 500 represents, from what I understand, the 500 top performing companies in the United States.
Yes.
So if we look at the SPY, which is not a bad thing to invest in, why is this bringing me to rocket companies though? I put in SPY. You know what? I'm beginning to dislike Yahoo Finance for that reason. I put in something and it takes me to something completely unrelated. So
Yeah.
if I go to SPY, the current value of SPY is $334.33. SPY is also very low in volatility, very high in volume, very reliable to stay within a certain range based off of the performance of the S&P 500. That's what I've
Yep.
come to understand. So
Yeah.
it's
It's
also a dividend paying stock.
sure. Yeah, because most of those companies that are going to be in the S&P will pay dividends. So you're effectively just buying up a bunch of those companies.
Yeah,
And if
and then
those
you have
companies,
passive income. If you were to buy something like this in quantities high enough, you would start developing passive income.
right? And from what I understand, ETFs are actually they generally carry lower fees. So if those people are dissuading people from buying ETFs, there's clearly some alternative motive there. So I guess my ultimate point is be very skeptical about what you hear and see. I mean, and Investopedia is a credible resource. Um, they have a lot of good, I don't want to say articles, but there are a lot of, I guess you'd call it more of like an encyclopedia for financial terms,
Yeah, and financial
terminology.
terms and knowing what the terminology is very, very important.
Oh, it's crucial.
So, I mean, let's look at the definition of an ETF. You know, what is an ETF? An exchange traded fund, typically a security that involves a collection of securities, such as stocks, that often
Mhm.
tracks an underlying index, although they can invest in any number of industry sectors or use various strategies. ETFs are in many ways similar to mutual funds, however, they are listed on exchanges and ETF shares trade throughout the day just like ordinary stock.
Exactly, yeah. So, yeah, I mean, there, and
Yeah, right here, some well-known examples. S&P or SPDR S&P 500 ETF, SPY, what we just looked up.
right.
And I just
Yeah,
recently learned that that is the most widely traded ETF in the world.
yeah. So now that you know that, you also know a little bit more about why, if the US has a financial collapse or a recession or the market crash, it can affect countries on the other end of the world
Yeah, absolutely.
because yeah, because it's not just that America has one of the largest economies in the world, it's that a lot of foreign investment is
Um,
directly tied to the US economy.
Okay, so
So,
we haven't actually looked into anything to buy just yet, only because of the kind of indications that I was receiving earlier from what I could see. These particular things that I have in my portfolio currently, I only have two things in my portfolio right now. But one of them, this JDST ticker code, is something that we historically see, or that I've historically seen going up when things are typically going down. And it's going up, and it's actually gone up quite a bit today. during the pre-market hours. The market is just about to open, and I do have a list of bull market shares that are all showing a downward trend. So I am very curious to see what the state of the market is in just a moment. And I'm actually going to jump over to Webull to see that, because I am actually expecting to see some very negative numbers here from the overall market early this morning. That's why I have not looked at anything to buy yet. Pay
Yeah.
attention to the state of the market before you start making trades. I think that that is crucial myself. Would you agree, Brian?
Yeah, I mean, you definitely want to take into account the
So
market as
I
a
actually
whole.
feel very good about making that sale yesterday evening on that stock that we bought, even though it
Sure.
ended up being a day trade. Right now, I am very comfortable with that decision, seeing what I'm seeing right now. So I'm going to jump over to the S&P 500 here in Webull and take a look at what's happening. And yeah, it did exactly what I thought it was going to do when I told you this morning, Brian. It gapped down.
There you go.
Do you see it?
Um, yeah, the stream refresh quicker. Okay.
Yeah, you might have to refresh your stream.
Uh, oh, okay. Yeah, I'm still on the article that you pulled up. But I just got a Robinhood notification about the JDST above $10. So.
Yeah, and the S&P 500 right now, it actually gapped down this morning from where it was at 3,349 points, where it closed yesterday, and it gapped down to 3,336. And
Yeah, and
when we say gap down, what we mean is there's nothing in between these candlesticks here. There is a significant gap in between them. So from what I understand, what that means is that this occurred during aftermarket hours.
yep,
And we don't
for sure.
see what that was that occurred. But when
So,
we see that gap down, that's a pretty ominous sign.
and we're looking at the stock that John sold after hours yesterday because the limit order went through, and specifically JDST. I'm not recommending these to anybody, especially the JDST,
No.
because to understand, I mean, to even get into an ETF like JDST, you have to understand ETFs. You have to understand ETFs that go after an index, which is usually a grouping of a specific part of the market. So you have to understand all of that, and then you have to understand essentially inverse ETFs. So you've got bear market ETFs, you got bull market ETFs. So you need to understand all of that before you before
And
you
we'll get there, but right now isn't the time.
right.
um, if we're
So
looking, though, I have this list that I've been putting together specifically for this project as far as very, very minimal cost stocks, penny stocks, that we might be able to swing in and out of, that we can look at one by one.
cool.
Um, and as I'm looking here, we do see a pretty significant amount of red. And red is something that we definitely want to avoid, but it's not something that we should be afraid of. Um, this is kind of the time where you can actually look at these things, and as long as you don't panic, and that's the important thing, don't panic
Well,
when you
red is
see red in your portfolio,
in your
because
portfolio,
yeah,
right?
in your portfolio, like
I was gonna say,
yesterday, I was sitting at what, negative 600, negative 700 on that, and now it's at 500. It's coming back up because I didn't panic and I didn't sell it when I saw it going down.
oh yeah, if you saw my portfolio right now, you'd freak out. I'm not exactly down tens or hundreds. So,
Hey, do you want
but
to share your
again,
portfolio sometime, Brian?
I mean, my portfolio right now basically consists of JDST. Um, because I'm, you know,
You're doing that
big
for a
play.
specific reason, though, right?
Yeah, big players make big plays, you know. So,
But
um,
when we look at those things and we assume that risk, you have to own that.
oh yeah, no, I have no one. I have no one to go to or run to blame if I lose thousands of dollars on the market. I've
So
accepted that I've accepted the risk for that.
yeah. So with this coming up though, then we
But
are definitely seeing some things that are not making us very comfortable with doing a trade right this moment. Um,
true.
which
But
this is a good thing to watch, in my opinion, because this is definitely something that you need to get used to. Um, and this is one of those times where you need to decide for yourself, am I going to make a trade or not? And if you feel like you have to force it, I personally am not going to force a trade. I'm not going to force myself to buy something if I'm not comfortable with it 100%.
sure. But I do want to say though that um, the reason I bring up my portfolio is because I wouldn't even say it's much of a portfolio. I don't have very many things I'm in.
Yeah, I don't have very
Um,
many things in mind right now either.
yeah,
There's not a whole
but
lot of diversity in it right now, but that's also because I've been kind of cleaning it up for
for
this
the for
broadcast,
the
this
stream,
channel,
yeah.
this project.
Right. Well, I mean, yeah, and overall, I mean, Robinhood isn't the only investments that I have. So I've got
Me neither. I
a
do have
larger
money
portfolio.
in Webull as well. Not nearly as much as I do in Robinhood because Webull has definitely been a learning curve for me.
Oh, I mean like 401ks, that kind of stuff. But so at the end of the day, I'm not selling right now because I haven't actually realized a loss. I'm showing a loss, but if I sell, then I've lost a
Yeah,
good
then you're
amount of
not getting that
money.
money back.
Right, and I'm not getting it back at all. So the worst possible thing I could do right now is sell. Effectively, what I'm doing is holding now. I'm
Yeah.
just I'm in possibly a long-term holding pattern
If it
until,
continues the way that it is, it might not be very long term.
yeah, if we have another major market crash like
Well,
we did at the
recession. I mean,
beginning.
it's not a crash until what? It's over 20%. I don't know. Let's look it up.
Yeah, there's a definition that
Yeah.
people use to determine. But
What
I guess my point is
defines a market crash?
if we go into a similar situation that we had at the beginning of coronavirus, then
Oh, and it took us to Investopedia. Stock market crash
there you
is
go.
a rapid and often unanticipated drop in stock prices. A stock market crash can be a side effect of a major catastrophic event, economic crisis, or the collapse of a long term speculative bubble. Uh, Reactionary public panic about a stock market crash can also be a major contributor to it, including panic selling and depresses prices even further. Famous stock market
Mhm,
crashes include those during the 1929 Great Depression, Black Monday
mhm,
of 1987, and the
mhm.
2001 dot-com bubble burst, the 2008 financial crisis, and during the 2020 COVID-19 pandemic. So they are putting the
Oh,
drop
absolutely.
in March in that same category, even though it was 17% overall. It was somewhere around 17 to 18% and didn't actually breach 20%. But um, let's see if they actually have a strict definition. They say the key
Sure.
takeaways here: market crash is an abrupt drop in stock prices, which may trigger a prolonged bear market or signal economic trouble ahead. Bear market meaning that it is downward, not upward. Market crashes can be made worse. Be fear in the market. Be fear in the market. These typos are messing with me. and herd behavior among panicked investors to sell. A lot of this is behavior driven.
Yep.
Several measures have been put into place to prevent stock market crashes, including circuit breakers and trading curbs to lessen the effect of a sudden crash. Understanding stock market crashes, although there is no specific threshold for stock market crashes. Okay, so there isn't actually a specific percentage.
Yep. So,
They are generally considered as abrupt double-digit percentage drop in a stock index over the course of a few days. Stock
right,
market
which,
crashes often make a significant impact on the economy. Selling shares after a sudden drop in prices and buying too many stocks on margin prior to one are two of the most common ways investors can to lose money when the market crashes. I'm gonna clean that up a little bit.
well, yeah, I would definitely agree that in March, before peak coronavirus, is we experienced a major market crash. So,
Yeah, because
um,
that was between 17 18%. So that is double digit percentage drop. Because they
and it
said
was in
we
like a
lost,
two
what,
week,
2 years worth of progress?
yeah, it was over like a 2 week period too. So,
Yeah, because it was from what, the end of February all the way up until the middle of March. There was like the
yeah,
littlest indication of a recovery halfway through it, and then it just bottomed out again.
yes.
Yeah, we can actually look that up. If we go back to, oh man, it is definitely going down too. If we go to the S&P 500 here and take a look at its trend in Webull, we can actually see, if we go to the daily chart, um, where that happened in February to March, and this is showing us this occurred between the dates of the 21st of February to the 20th of, or the 24th, 25th of March. So it was almost a month long downward trend. But there were some moments, like at the beginning of March, where it looked like it might come back up, and then it just bottomed out again.
Yeah. So,
So there was a fight. I mean, there was a struggle. There was definitely a
yeah,
struggle in the market to keep it from going down, but it just wasn't successful.
exactly. Yeah. So, yeah. So if there's another one of those, then our JDST will explode. If not, it will just, if there's just if we're stay if we go into another bear market, it will, creep back up and above what we have, what our position is in it, what our average cost per share is, and then we can
Yeah,
swing it.
and it looks like the Dow is trying to move upward again, but it looks like it is coming up against some heavy resistance. It's struggling. It looks like everything is struggling for the most part.
If we ever if we ever get like fan art and stuff going, I want people to draw like it's like when we, how you talk about resistance and struggles and like you talk about the Dow, it's like, it's an actual person. It's
Yeah,
like
those
it's a
memes
character.
are hilarious.
Yeah, it's like it's an actual character, you know, and it's like resisting. So
Yeah.
like a bubble is like the villain,
Yes.
you know.
So this is actually definitely a good thing to go over though today, since we're seeing this kind of behavior in the market right now. Um, So, well-known U.S. stock market crashes include the market crash of 1929, which resulted from economic decline and panic selling and sparked the Great Depression, and Black Monday in 1987, which also largely caused by investor panic. And in 1987, I think that there was this precursor in 1987 because what was it? Black Monday in
Hmm.
1987 was in October during the third quarter.
Mm,
And in the
okay.
first quarter of 1987, the Dow was actually reaching record highs. And here recently, they've also said the Dow was reaching record highs, and there was some speculation that I heard that that's a pretty ominous thing when we considered the state of the current market and also considered the consequences of that happening in 1987 with that market crash, because that was over a 20% loss.
Yeah, yeah, those are some pretty big crashes in the history. But I mean, the the natural the natural way is a bubble, where you have some like the dot com. You kind of have
Yeah.
a disruption in the market. You had a lot of these new tech companies. Nobody knew exactly what was going to happen with them, but everyone was excited. Everyone wanted to make money, especially um, around the turn of the century, because it it only gets easier to invest in the market if you're the average person. Like, look at today, anyone can just go on Robinhood or Webull or a couple of the other options they have available to them and just start an account and start trading.
Yeah,
So,
they call us retail investors. That's our name.
oh, okay,
Yeah,
interesting.
we're
Okay.
referred to in the market as RH. We're bad people.
Well, I don't know about that. You're just the average person. So yeah, you're not a brokerage company. You don't work for Merrill Lynch or, New York Life, those places. So, where was I going with this? Sorry, I think I lost my train of thought. We were talking about, oh so the dot-com bubble is a perfect example. So you have a bunch of people, they don't know what they're doing. They see a trend happening, they get on it, and then the people who are the early investors, they're the professionals, they're the venture capitalists, they have a better
Not
idea.
exactly.
Um, Sometimes not much better, but a better idea. And then so you have everyone else jumping in on them, or people telling their financial advisors, "Oh, buy all of this for me, buy all this MySpace stock," something like that. So everyone jumps in on it. It grows, it grows, it grows, and then it's overvalued. The whole market's overvalued, or a particular stock is overvalued, and people at some point realize, wait a second, this isn't worth it. This is not worth what I'm paying. And then that's when you have people start to short sell, bubble bursts, everyone loses their money, it crashes, and people start panicking. They panic sell, they lose a ton of money, and then you're done.
Well, that's kind of like what happened with what was it? We were talking yesterday about Hertz, um, because Hertz declared bankruptcy.
well, yeah. Well, I mean, on a smaller scale, I guess so. But Hertz is more of an anomaly because Hertz is. I mean, don't get me wrong. It's definitely an example of irrational behavior in the market. But
And it was
I'm
very easily influenced by uninformed investors that didn't know what they were doing for the most part, because that was, um, for the most part, attributed to Robinhood recommendations based on
sure.
volume and percentage gain. So they were advertising for a while, and I haven't seen this in Robinhood for a bit either. I actually have not seen in Robinhood where they give me this top 10 or bottom 10 list. I haven't seen those in quite a while, and
Yeah, you just get stuff on your feed,
yeah,
or it'll say
and
like what.
that was what a lot of retail investors were using, from what I
Mhm.
understand, to influence their decisions, I guess, is what they're saying. I don't know for sure, but um, they did make mention that it was a substantial number of Robinhood users that were putting money into Hertz, even though they had declared bankruptcy, where typically after a company has declared their bankruptcy, they've filed, and everybody's getting out of that stock as quickly as they can.
Oh boy, yes. Yeah, they are.
You know, the
Especially,
the floodgates are open.
right, especially because, yeah, they're not going to make their, I mean, they have, if you file bankruptcy and you file the worst chapter possible, you're basically just paying your creditors. I mean, your average stockholder is pretty much at the end of a long list of people that have to be paid out first before they can be paid. So, yeah, that's it. Um, so, well, I shouldn't say a long list. Depends on the company, but um, could be a long list, could be a big short list. But yeah, I mean, when you're looking at a bubble, though, a bubble is um, where you're overvaluing something. So Hertz was weird because people were completely uninformed. I mean, all of this boils down to emotional investing, and people go, even the article that you were reading before, it's just people investing based on their feelings and not, rationally to make money. But Bitcoin is another good example. People had no idea what they were doing with cryptocurrencies. No
But
idea.
cryptocurrencies are incredibly popular, especially with the younger population in investing. But then again, so are options, and I mean that was one of the first things I said. Stay away from them unless you have a intimate understanding of what you're doing with them. I
Right.
have one in my account here. Yes, I do, and that is something that I got for the purpose of exercising for myself. I did not get it to sell. I actually got that
Right.
to exercise for myself for that particular stock for just a couple of different reasons. One of the reasons being an option is for 100 shares. Every time you get an option contract, it is always for the value of 100 shares. So this particular stock is a monthly paying dividend stock, and it's 6 cents per share every month. So securing that value that I got that option for, and that expires on the 21st of August, which it's been able to actually raise itself in value to where this option itself is actually valuable at points. Um, what that tells me is that it could actually very well be over $5 a share at the time the 21st rolls around. And if it is, then I'm able to get those 100 shares for $5 a piece instead of having to pay whatever the market value is. Um,
Yeah.
and that option didn't cost me very much money because I got it at a very low price. Um, but aside from that option, I am not messing with them because they are way too complicated for me to understand right now. And this was just part of my experimenting and learning. And sometimes we have to learn the hard way, and I am not immune to that.
Well, predictions are kind of like assholes. Everyone has one.
Yeah,
So, and that's how, for the most part, options are. That's how they work. I mean, and arguably they're worse than just throwing money at the market and gambling, because if you're locked into a contract, then you're on the hook for that. So,
yes,
whereas,
because for better or
yeah,
for worse, that's mine. If it's worthless when the expiration date comes up, that money is gone and never coming back.
right. So, like, if I make a prediction to you, right, tomorrow, and I say, hey, I think the market's going to gap down again, so I'm going to buy, and then I'm going to hold until it goes back up a couple times, and then I'm going to sell. So if I buy an option and I'm wrong, I'm locked into that wrong decision. Where if I just make a prediction and then wait, and then even place like a limit order, um, there's nothing. I'm not out anything, because if I'm wrong, my order won't even get executed.
Yep.
So, I mean, options are a more efficient way to do that, but the consequences or the downside is way worse for a bad call.
Yeah, that's
So,
that's the way it is though. Um, and we can't predict it. I have
Yeah,
no
you can't.
crystal ball.
Yeah, exactly. You can't
It's a
predict the
guess.
market.
It may be an educated guess, but it's a guess nonetheless.
Yeah, I mean, a good example is coronavirus. I mean, people were predicting, okay, well, the market crashed. We'll go into a recession. Typically, in a recession, you can still make money because there are sectors that are, essential goods or things that people will buy any time of their life. And so I heard people even investing in those things, expecting, well, I mean, if I just go ahead and buy these, then they'll continue going up. No, everything was wrecked.
Well,
So,
they weren't
you know,
necessarily wrong. They just got the timing wrong.
well, but that's the thing. I mean, yeah, it always depends on the timing. But generally, you can reasonably assume that the one cycle follows the next. So, and they were wrong in the sense that they thought it was immediately going into a next cycle, but it actually didn't. It went to another cycle.
Yeah, and that's where we kind of saw that struggle.
Yeah. So,
We were kind of seeing a
so
tug of war happening there.
yeah, exactly. People were just like trying to crawl out of it as quickly
And
as possible. But
like I said, I mean, if I look at my account here and I go to the all section, I just pulled it up in the web browser here just to make it easier to see. If I go to all, it's showing me all of this history that's just pretty much flatlined all the way back to June of 2019,
mhm.
because that's actually when I opened my Robinhood account, was back in 2019, and I got my one free share from the referral link that I used, and I bought one single share of Ford, and it was almost like $10 at the time. So I actually made my very first deposit back in June of 2019 of $10 and bought one share of Ford. And after I did that, I did absolutely nothing with this account. And that's why we've got this really long stretch of nothing for my entire history, because it's still part of my history from the time that I opened the account. I didn't think to look back at this until the pandemic, and then I remembered, because when you have a whole lot of time to yourself and you can't go anywhere, you start to remember stuff if you have nothing to do. And I said, wait, I think that I did this before, and I went back into it, and that's when I actually started looking around. And for me, luckily anyway, it was in April that I started looking around in it. So it was early April that I got back into my account. So it was after the market had reached its bottom and then
Mhm.
started to come back up. As slowly as it was actually moving back up, but it was still coming back up. That's when I started looking at very particular things. And if I go back here, I actually have some lists that I haven't done anything with for a while. And these were actually some of the first stocks that I held. Um, and I've got that in a list here under what was called sold. And this was just a way of reminding myself, I just sold these stocks. Don't buy them again until it's been longer than a day. And that was just me reminding myself, hey, don't do that. Um, I also came to find out that lists are actually not something that's made readily available to all users immediately. For some reason or another, I was given the ability to create lists, and I didn't know it. I didn't know that was a special feature. But not everybody can generate lists on their Robinhood account.
Oh, okay. That makes sense.
I don't know what the trigger was. I don't know what the criteria was, because I honestly just wasn't paying attention with the overwhelming amount of information I was trying to sort through, as it were. But the web browser version actually doesn't seem very friendly with the list. Um,
I have a feeling they just don't put as many resources into the web browsers. They do the app because it's
Actually,
meant to be
you'd
a
be
mobile app.
surprised that they actually have a lot more tools and things available in the web browser version than they do in the actual app. Because in the web browser version, you can actually filter stocks within a certain dollar amount. Like you can actually look at stocks that are between like $0 and $5 and just filter out everything else.
Okay, so it's just that one specific feature that's kind of wonky.
Yeah, and I think that it's just because it's not something that's granted to everybody in the app. So the web browser itself doesn't know how to respond to it because it looks like it's just expanded all of my lists, is
Hmm.
what I'm just now realizing. All of my
Well,
lists are expanded. So let me actually see if I can just start
I'm glad
closing
you.
these.
I'm glad you can actually filter on the stock price that you're looking for because I wanted to be able to do that so I can know what stock to choose from if I'm specifically looking, you know,
Yeah,
for
I can
low
actually do that
value,
in just a
low
moment.
cost,
Let me,
or high value, low cost stocks.
yeah, I can actually do that in just a minute after I get through these lists and actually close them so I can move through them. Okay, so this is the list I was looking for. Is my original sold folder. Um, some of the first stocks that I bought were actually cannabis stocks,
Hmm.
like ACB, Hexo. Those were cannabis stocks.
Yeah, there probably would have been a bubble surrounding that if there wasn't
It was
so
actually
much
pretty.
government regulation.
It was actually pretty boring. Um, they didn't really move a whole lot, and I only
Nope.
bought them because of the cost at the time. Like you see, Hexo right now is trading at 68, 69 cents a share.
Right, but do you remember all the hype surrounding
I
a
thought
lot
there
of
would
these
be
companies
hype
when they were
surrounding it, but that bubble came and gone. I mean that particular inflation had already kind of ran its course. Is the best way I could describe it, because like I said, for the most part, they were very boring. They didn't move a whole lot. They were listed as being highly volatile, but they didn't move like they were volatile.
well, I think they just didn't get the traction.
Yeah, and I figured if everybody's stuck at home, they're probably gonna want to, get something to help pass the time.
Well, I mean, that industry is works completely different than others, though. That's my point. Like,
Yeah, a lot of the
you
ones that I
can't
found in the
just,
stock market, though, they weren't based in the United States, though. They were based in Canada
yeah,
or in the UK. They were based overseas or in different countries. So I don't
exactly.
think the
Yeah,
United
so,
States market itself is really geared towards cannabis just yet, because most of them were listed as medical.
right. Well, yeah, then, so you have to ask yourself, are you going to invest in a foreign company? That takes a different level of understanding. I mean, now you're,
At first, I didn't have any understanding at all. I just thought, hey, people are going to want to smoke pot. That
right,
was my
but,
level of understanding when I started.
but actual investors, the people who drive the initial, I guess, burst of popularity
Yeah.
of like an industry, like if
And
they're
there was another one of these stocks too, though. One of the cannabis stocks. It was this ACB. This ACB
Mhm.
stock. When I first bought into that stock, it was actually like 75 cents a share when I first bought it. If I go into it here in the app, it actually has my history here now. Yay! I couldn't find my history in it for a little while. So, well, it only has a certain amount of my history in it. But when I first bought it, it was 75 cents a share, and I scooped up a bunch of it, and I was actually holding on to it. Um, and then they did a reverse split.
I mean, I saw an example of they were trying to do like it was an IPO, but I don't think they were even listed on any exchanges. So they were just advertising on the website
Yeah.
and like paying paid ads. So I don't even know if some of these companies were allowed to be listed. I don't know what it was, but you know,
But
so
yeah,
I don't
when
know. To me, it was kind of sketchy. But well, to be fair, an exchange is a secondary market. So, but at the same time,
yeah, with
if
the
they
ACB, when I first bought it, oh, it looks like my messages aren't even available anymore from when I first bought it. Because it was at 75 cents a share when I first bought